Hi, good morning. Here we are with Unit 3, Activity 4, and talking about Harmonized Sales Tax, HST. HST is involving every business that's in society in Canada, and you have to either pay HST, which you get back. So when you buy something, you are paying HST, and when you sell something, you are collecting the HST on behalf of the government. So now here, if you scroll down, that's what this is telling you. And so, for instance, if you bought a sweater that was $40 and you would have 5% and plus 8%, so 13% is the total HST, the tax would be $5.20. So now what happened if you're the buyer, you would debit the sweater, so that's an asset, so it would be debit clothing, $40. Then you would debit HST recoverable for $5.20, and then you would credit either cash or AP depending on how you paid for it. Now, as the seller is you're collecting on behalf of the government. So let's say I sold the $40 shirt. So I would credit my revenue for $40. Then I would credit HST payable for $5.20. And then I would debit either cash or AR for the $45.20 so that my debits would equal my credits. Now, in here, they give you some examples here. So here's one for Pete's Gym. He buys a new exercise bike on account. The cost is $425 plus HST. So you can see here that the HST was actually $55.25. It's calculated by taking $425 and multiplying it by 13%. So therefore, the total for the bike is $480.25. So here's the journal entry for Pete as the buyer. Debit the equipment $425, debit HST recoverable, and then credit accounts payable because they bought it on account. If they had paid cash for it, this credit here would have been to cash. You notice how the sum of the debits equals the sum of the credits? It's in balance. All right. Now, HST recoverable has a debit balance. It's a contra liability account. It would be up in the asset section, even though it's a contra liability, it has a debit balance, and I've been putting it in the asset section because it's something that you are going to get that money back. Now, HST on revenue, things that you sell as the seller. Here you have on October 6th, Pete sells a 2-month membership for Pete's Gym. So the value of the membership was actually $150 plus HST. So the tax on that is going to be $19.50. So here's the journal entry. You're going to credit fees, members' fees, which is revenue. You're going to credit HST payable, $19.50, and you're going to debit $169.50. That's what you're collecting from the customer because they're paying you in cash. If it was an on-account sale, this would be a debit to AR. Exact same numbers. Okay.